which I'm currently on. The markets are still open. So last week we talked about the US dollar weakening, and this week we saw the US dollar continue to weaken. But I really want to emphasize the patterns or the trade opportunities that were within the market. So, for example, before we get into that, let's talk about fundamentals for a bit. When I've talked a bit about correlations, but when gold goes up, the US dollar does the complete opposite. So there's economic theories that are called safe havens. What happens is that when the markets are in panic, right, like right now with COVID, when markets are in panic, people shove their money into gold. And because gold obviously starts to appreciate in value, and gold has through time been a very valuable metal. So what you'll see when people are panicking is that they run away from the US dollar and they shove their money into gold and the yen pairs. So during times of turmoil, you'll see the yen pairs rising and gold. I don't know why the yen pair, but gold and the yen pair, they rise whenever there's panic, and the US dollar falls whenever there's panic. And then when there's some recovery within the markets, you'll find that uh, the US dollar goes up and then gold falls like crazy. Now go back to when COVID started, and you'll see that the US dollar index fell drastically. I did a video on it actually. The US dollar fell drastically and gold shot up, and it's still shooting up. So, based on those fundamentals, we were looking for sell opportunities on the US dollar this week. Um, so already we already have I think I did talk about I already have a sell position on the US dollar, which started at this rising wedge here, right? So this was the first huge rising wedge. I sold at the divergence, right? Here was the divergence sell. I've talked a bit about divergence, but you can go check out the video where I detail what exactly the divergence strategy is. So here was the sell, and then I held on, held on, held on. We faced a bit of a pullback, and I was just chilling and waiting. And then here was, I think I took it 2 weeks ago. I sold here, took profit at this area here, and then price came back to that area. And then, as you can see, there are two positions open. There are two positions open to cover the spreads for this trade. A lot of people forget about spreads. When you hold positions for weeks, you are going to be charged spreads. And if you don't consider that spread, you are not calculating your risk properly. So, anyways, I added two positions here to cover first that spread for this position here, which is quite small, and an entry here. So this is a very unique kind of falling wedge or pattern of some sort. This was a resistance area I've marked out, and then this was the support. So on Monday was the sell opportunity here. As you can see, the two positions, and price went down, and then Wednesday price shot up, and then I was looking for another opportunity for today, which is Wednesday, price shot up, right? It ended up creating what looks like a symmetrical triangle, right? And so price was trapped within the symmetrical triangle here. And then we're looking for sell opportunities, which I have marked out here. So today, this was the opportunity to add on to your position already. If you had been in this trade already, the opportunity is to add on to the position. So that's what I focused on this week, which was looking for more opportunities to sell. What am I looking for next week? So it's important to note that you can day trade some of these positions. You don't have to keep holding them for as long as I do. I like to hold them so that I don't overtrade, and that I don't have to keep analyzing so many different pairs and just going through so many different patterns, opening, closing, opening, closing. Because when you start trading in huge lot sizes, you start paying a lot of spread. So I want to always avoid that. And the next target for me is this area here for next week. So essentially with this symmetrical triangle, which was a day trade opportunity, markets are still open, by the way. For next week, I'm holding on to this position. As we fall, I am still keen that we're gonna finish this rising wedge to take profit here. So that's why I'm not closing these two positions or this position that I opened this morning. If we go to the 1 hour, we can see that the symmetrical triangle here is nearly complete. Once we touch this area here, now what's also possible is that we could touch this area here and then continue. We can bounce up and go up. There's also that possibility, which you never know what can happen. If you go on the 4 hour, what do we see on the 4 hour? It seems like price is going to continue to just break through it completely. I don't know what's going to happen, but it does seem like for next week, we're going to see price just continue to shoot down and complete the rising wedge, which we have started to see for the past couple of weeks. So it just shows you that a lot of trades you'll hold for 3-4 weeks if you're doing it properly. You'll hold, you have to be patient. You'll hold for 3 weeks if it's something you enjoy. I prefer to rather have 10 good positions, which make me 10. If I place 10 positions for the month and say 6 of them lose, that's fine. And then have 4 really strong positions like this, where you just add on, add on, add on for the month, and then you're not over trading, placing too many trades. Because what happens when you over trade is that you actually start to eat up your returns. And so, say you were up 12 or 16% for the month, you end up -2 if you keep over trading different pairs as compared to if you just add on to winning positions. So that's what I'm looking for next week. That's the review. This was the pattern, was a falling wedge. I don't know if you call this a falling wedge or a rising wedge. It does seem like a rising wedge, a backwards rising wedge. So I'm gonna call that a rising wedge, because this is the rising wedge, and this is a mirror version of the rising wedge. So this was just an intraday position for people interested in intraday positions and adding on to your winning positions. And this first position is for trend traders and people who want to trade patterns. Yeah, that's pretty much it, guys.